Hello everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predicting gold prices. So in my last video, I was warning that the Gold Forecaster Index was dropping, so I would be wary about uh, gold underperforming, and that's actually happened. It has gone down from 1850 to now 1750, so that's a pretty big drop. So let's see what the status is right now. We have a new data point on the gold forecaster index, and it's not looking good. Okay, so these are based on leading indicators, and the leading indicator is saying that there will be weakness in gold. So it's a very large decline. It looks a bit like the decline that we saw in 2011, and we had a very big decline there as well. So we need to watch this. If this decline goes back to zero and below zero, then this is an omen that gold is going to go down. So I'm not buying more gold at this moment. So I want to wait for this to settle, because this is really not looking good. It could go even lower in the next month and even negative. So not very good. Taylor roll rate is still okay. So we are still at 2.5%, 2% Fed funds rate, because they are going to hike rates, and it should be 10%. So this is still okay for gold. Unemployment is rising, so that's also good. So this component is up, but inflation is down. But overall, the misery index is still pointing upwards. That could support gold higher. No new numbers here. Still Q1. I know Peru had a decline of about 30% in copper production, so that's good. That could support copper and also silver. This is not looking good. The funds are actually selling GLD, so institutionals are not buying. Same here at COMEX. We see fund flows out of gold. LBMA is flat and silver holdings were down. So normally when silver holdings go down, silver should go up, but it's really weak, very weak. Even when silver holdings go down, silver is still dropping. So that tells me that something is really wrong in that market. The latest China gold demand is up from here. Silver is also up, and it's about the same historically right now. So nothing, nothing to speak about here. It's on the historic average, but it's good to see that China demand is rising. Silver demand is down, so the holdings of silver are down. That's not good. China silver demand is cratering, so this is a red flag for me. It's a warning sign that silver is not doing well. Okay. COMEX is still dropping in registered silver. I want to see this drop even more until here before I get bullish on silver. US mint sales are abysmal. So Silver sales back to the lows. Gold sales also crashed back to the lows. So it's not looking very good. Premiums are still high. That's good. But it doesn't seem like these premiums are supporting the gold price and the silver price. So yeah, I'm neutral to bearish right now. Shanghai silver premiums are still not at this level, so more pain could come as the premiums rise. So China definitely doesn't like silver at this point. Premiums were much higher in the previous years. Upmex gold premiums still high. PSLV premiums. Let's take a look. It's looking very bad. PSLV premiums are at the lowest point ever, minus 4.5%. Forget silver, okay? Forget silver. It's not looking good. COT report is still okay. So this should point to a bottom in silver, but look at this. It keeps on declining the silver price. So I have not a lot to say on that. No positive things. Lease rates. Yeah, it's down for the gold, so not really bullish. If it were bullish, this red line should go much higher, but it's not. Silver also not bullish. It's down. It's going down, so I expect silver to keep on dropping. Swiss franc. There is some strength in the Swiss franc, but still very low. Tips also very low due to high yields and inflation coming down. Real yields are still okay. That could support gold a bit. Seasonally, we are at the bottom, but I think the gold forecast index is more important than seasonality. So it could bounce a bit higher, but it's not looking good. The trend is down. And as you can see here, the gold miner sentiment is crashing. So this is not looking good. This could go even lower, and then gold miners could crash even more before we bottom out somewhere here. And there's a reason for this, because oil is really high and the costs are up while gold has not gone up. So those miners are in big trouble, especially the silver miners. They are all loss making. Okay, not looking good. Let's go to the copper. Copper is still in positive territory for real economic activity, but it's very weak. Here we see yields up, but copper has actually crashed. So yeah, we are in a recession. Copper warehouse levels should go down. You can see this from last year, which would push copper up. But here you can see copper is actually not doing well. The warehouse levels are stable and should be going down. So that's why copper is now crashing. So this is not bullish. China power consumption also down. growth rate is at 0. So also not good for copper. Credit impulse is downwards. Shanghai index has actually rebounded, but looks like it's topping out. GDP forecasts, we know that it's minus 2% now. Very bad. There's no growth. We are in a recession. Now the scrap refined copper premium is at a very low level, so we could see a small bounce in copper, but I wouldn't get into that. I don't think copper is going to do well in the next 2 years. China imports not doing well. China seems like it doesn't need any base metals anymore. Baltic Dry Index also crashed lower. Yeah, then we will talk about later. And this is also very important. The break-even inflation rate is crashing. This is not good for gold. So a lot of signs that you shouldn't be buying more gold and gold miners. Recession is also starting. Growth is still low. And the Manarino index is at a high level, which is bad for stocks. Okay, so I wanted to talk about some new power that I absorbed, and that I absorbed the Greg Ibn-Dal ammonia forecaster. So this is the Greg Ibn-Dal formula, minus 165 plus 33.5 times corn price times this number multiplied with oil price plus the inflation expectation. And it's a very nice formula because this way you can actually predict the fertilizer price. Let's take a look at this period here. So the Greg Ibn-Dal ammonia forecaster is clearly a leading indicator. So we have a top here, and then later on we got a top in the fertilizers, right? So this is really interesting. So I got a new power now, and I'm going to use it. For example, here it's dropping, then you know that fertilizers are going to drop. Here it's rising, so fertilizers will probably keep on rising. So it's still at a very high level. It also tells you that fertilizers are correlated to food, corn, oil, and inflation. So always keep in mind food, energy, and inflation. All of these three components need to go up in order for fertilizers to rise. So just wanted to mention this. Fertilizer prices are actually positive. So they are rebounding right now and probably going higher. So we're still in Verde Agritech. More on that later. So coincident lagging and leading indicators are going lower. Yeah, we need to prepare for recession. You can do that by buying gold, bonds, and cash, and invest a little money in good companies. But do not buy the stock index because I don't think we are going anywhere. M2 is flat. That's also not good for inflation. Inflation is topping out. Not good for gold. Okay. A lot of signs that are not good for gold. Here as well, QE has stopped it. It's still topping out. So the Fed is not buying any treasuries and mortgage-backed securities anymore, stopping out. So we're in QT mode. Also not good for gold because money supply is not growing anymore. Okay, let's take a look at credit spreads. This is a way to look at GDP. This is not looking good. So the junk bonds are cratering and I don't see any relief yet. Junk bond yields are up. Okay, here we see a small correction. GDP. GDP is also not doing well. It's in a declining trend. So yeah, it's not looking good for the economy. Let's take a look at the 2-year yields to see how much of a rate hike we can expect for the next FOMC meeting. It spiked to a high and now it's retreating a bit, but I think there will be another 50% rate hike. And that would bring us to somewhere here. Okay, so let's expect some more pain ahead. Rate hikes are coming. Now on to deficits. Budget deficit has actually improved. Goods deficit has also improved. Services a bit less. Here we see that there's a lot of improvement. I think the United States is doing very well, and that's why the US dollar is so strong. The euro is cratering. And here as well, import prices down, export prices up. That's good for USA. So the gap is closing. That's actually good news for America. Capacity utilization. Let's see where we stand here. Still at a very high level at 80%. Okay, whenever we are at 80%, inflation will be high. So I expect inflation to stay at a high level. Okay, on to some charts. This recession is very different from the 2008 recession because here you see a crash in inflation. Here you see a rise in inflation. So what's the difference here? I think the difference is that here we had demand destruction. So oil demand went down. So imagine the demand and supply curve. The demand curve here went to the left and quantity goes to the left. So that's a recession. Here, on the other hand, it's not about demand anymore here. It's about supply. Here, the supply curve goes to the left. So that increases prices and decreases the quantity. So here we also have a recession, but an inflationary recession. This is a deflationary recession. So these are two different animals. So I expect that we are going into a recession, but with a lot of inflation. So prepare for that. Um, keep buying commodities because they are going higher, even when we have a recession. Manufacturing is cratering, tells me that the supply is gone. So this is a huge drop again to the levels of 2021. Yardeni decreased his outlook for the S&P. So this was the old chart. We still had some hope that it would go up. Now we have no hope anymore. So we're not going back up to here. It's probably going to keep on going down and then maybe stay flat for the next 2 years. So it's not looking good for stocks. I would avoid stocks at this moment. And we got some news on FOMC. They are going to keep on hiking rates to about 3.54%. It's amazing. So they're just going to crash the economy. And yeah, we need to prepare for that. GDP was going to minus 2%. So let's see what they will do in the next meeting because this is unsustainable. They are hiking in a recession. Here another view on what your returns are. So these are the equity returns for the next 10 years. Currently we are here, negative return. We have negative equity returns. I translated this formula into a chart. So here you can find the chart. We are still at bottom levels. So don't expect equities to return any money. Find something else to invest in. Nice chart on fertilizer shipments. So China used to export a lot of fertilizers, but this year you can see they are not exporting that much. So that tells me that there is a shortage on fertilizers going forward. So that's why I keep on investing in that commodity. Also, nice correlation on farmland, which is a new hype that's coming in. A lot of people are going into farmland. So this is the farm real estate value. It's going up. And you can see that this coincides with the peaks in fertilizer prices. So this is going to keep on rising. Another nice correlation between fertilizer prices is that the railroads have a lot of fuel surcharge this year. And you can see the correlation here. As this rises, you'll see also that the fertilizers rise. So there's some correlation here. Potash is expected to rise further. You can read this article here. It's probably going to go to $1,200 per ton. And that's a 50% rise. So very interesting if this is going to occur. Urea is also rising. We know that natural gas is needed to produce urea. Natural gas is going up, okay? Especially in Europe, but it will also affect US natural gas. So I expect that urea is going to go higher. We also know urea is mostly produced in China and Russia. So they are going to see higher natural gas prices. So I think a lot of plants will get shut down, especially in Europe. So I expect higher fertilizer prices as well. JP Morgan sees oil heading to 380 per barrel if the conflicts escalate. Of course, on the other hand, we had Citigroup saying that oil is headed to 60 because of the recession. So take the average, it's about 200 per barrel. It's a nice number. So I think there's still upside in oil. Nice chart here that I found on oil. So this is oil versus the diesel and gasoline. You can actually use this chart to predict the price of diesel and gasoline. Currently, it's higher than normal because there are not a lot of refineries. But eventually, this will come back down to a normal level here. Nice chart to use. Another thing to keep in mind, Biden is now drawing the oil from the strategic petroleum reserves. This will probably keep on happening up until the end of the year. So once this stops, you can expect oil to head up higher. So this is the reason why oil is now going down a bit. But once this stops, I expect oil to go up again. So this is an accumulation phase. Interesting charts here on hurricanes and how they affect the oil production. So watch for hurricanes because they can have an effect on the oil price. So these are hurricanes and these are hurricanes. Copper, I sold all of the copper miners because I see that there will be oversupply coming in the next years, 2023, 2024, surplus of copper, and the copper price will be going down, probably to the 3.5 level. It's already at 3.5 almost. But yep, I don't think it's the time to be in copper miners now. Even though we see that copper inventories and other base metals are at all-time lows, you could argue that base metals should be going higher, but apparently not. So the recession is in full-fledged mode right now. So yeah, we need to get into safety. And even gold is not a safe trade right now because I see inflation dropping as the gold forecast index is also dropping, and it's a leading indicator. Okay, so watch this. Next month we will see more. Will it keep on dropping? Then we need to start selling the gold miners. Okay, that was this episode, and I'll see you in the next video.